Well, I thought I was doing the intro, sorry. Well, unless you've been living under a rock, you probably are realizing the market has shifted. Well, how bad is it really? I think that's going to depend on whether you're buying or you're selling. We're having conversations quite a bit right now with sellers. All of this has taken place basically in the last month, and the speed at which the market's changed has been eye-opening.
Fast.
Very fast,
Rapid.
Yeah. Things are still selling, so that's the good news, right? Things are still selling, but if you see comps from last month that sold, one thing you have to keep in mind is your house is not going to sell for that much. Mm-hmm. It's really all taken place in the last month. On the plus side, most markets went up by 40% this year, up until April, and when it started to go back down.
So why is this all happening? Why has there been this big change in our market? What's brought this on? And really what we can talk about is quite a few things. There's three pillars of any market, which is affordability, supply, demand. So I guess let's just start with the inflation interest rate part, which leans into the affordability. So looking at properties, looking at price points, all these things, you start to examine like, okay, if I bought this house 1 month ago and my interest rate was 3.75 and my payment was X, and then you look at 1 month later and you're 5% or above, but the price hasn't changed, your payment difference can be $1,000, $2,000, it depends on the price point. Mm-hmm. But all of a sudden you're paying $1,000 or $2,000 more a month than this guy over here that bought 1 month ago. And your income didn't go up that much overnight like the interest rate did. So then all of a sudden you're stuck looking at a lower price point and having to shift on some of those things. So a lot of people that live in the Seattle region are RSU or residual stock units for their income. And when the stock markets shift, Amazon, for example, local employer, ever heard of them? Amazon stock was down 33%. I guess it dropped another 7% today.
Day's not over though. Could recover.
Day's not over. You look at your income, you look at your portfolio, you look at your down payment that you were going to cash out of the stock market, and it's not there anymore. There's kind of your affordability factor, which then starts to affect pricing. People don't make big financial decisions when they're on shaky ground. Mm-hmm. The other half of it would be supply and demand. The supply and inventory of houses has definitely gone up, and the demand of buyers has gone down. So you're starting to see that shuffle of what do we do? Where's this going? And more sellers are saying, well, I need to sell my property. What's it gonna take? And then all of a sudden you're hitting the price point starting to get lower and buyers having to shift on mindset.
Is this a bubble? Well, if you're defining a bubble based on 2008, the answer would be no. That was fictitious demand because banks were giving loans to anybody who could fog a mirror. Over-leveraged people using their equity in their homes to buy boats and cars and then suddenly not being able to repay. The big thing with 2008 is that overnight credit collapsed and nobody could get a loan. Businesses couldn't get a loan, you couldn't get a loan, I couldn't get a loan. Banks were collapsing and there was going to be far worse consequences of that quickly had they not, bailed out the banks, unfortunately. So that was a little bit of a different scenario than today. Today's gonna be more of a controlled landing of a market that was also super inflated by abnormally low interest rates for a protracted period of time. Mm-hmm. In fact, most buyers today at their age don't know rates over 3.5. When I started in real estate, they were 7. And we're probably gonna be 7 again soon. How long is this gonna last is something you might be asking yourself right now. And I'm not gonna give you a good answer on that. We really don't know, but I can tell you what to look for as a sign that it's starting to turn around. Mm-hmm. What you're gonna wanna look for is inflation's back being broken and the inflation rate starting to go down. Once that happens, once it's continually going down for maybe 2 months, we're probably gonna start going into recovery. And then the housing market and every other market after that we'll start to recover probably 6 months after those numbers come out. But that's all I can tell you, because until inflation breaks, nobody knows how long this is going to take.
So now that we have sufficiently bummed you out, let's talk about where are the opportunities? Where are we pivoting to? And where are you going to get the most benefit from? So you're a seller and you're going to be a buyer. What does that mean for you? Typically, you're doing a move-up property, so you're buying something for more. So just using completely round numbers that just make simple math, we're gonna say, okay, your house now that you're gonna sell was worth $1 million. The market shifted 10% down, so now you're at something like 900. You've lost 100 grand. So then you're like, cool, I've had my cute little townhouse for a while. I'm gonna go for a big proper house because I have a growing family. You're then, okay, cool, we're buying for $2 million, which is now 1.8 because everything shifted 10%.
You just made 100 grand.
And you're doing great. So it's kind of a hit in the beginning, but then you're like, but here's why it's not so bad. And so that's gonna be your buy sell. Let's just say that you're a buyer entering the market. You're new to Seattle, which is a super common story the last several years. What does this look like for you? And it's pretty killer. The ability to choose houses, to have options, to go from being in the backseat with the seller driving to now you're driving that car. You could do inspections, you can negotiate on pricing. You're not having to make a huge financial decision in 1 week or less. And that's pretty amazing. You're getting time on your side to make calculated, educated, confident decisions, which is something that's been a bit of a struggle the last few years.
Little life hack too, if you are going to buy, when you're negotiating, have the seller pay down your interest rate. You can, for 20 grand on $1.6 million, you could get them to buy your rate down from 5.5 or 5.25 to 3.75, which dramatically changes your payment back to what it would have been, a month ago.
Yeah.
And now you're no worse for wear. Plus, you probably got a better house for a little bit less money.
You're bragging to your friends. You're buying drinks in the club. You're doing all the things. You got that low interest. The payment's less.
And the house was less.
So
there are tricks.
So it's not all doom and gloom. There's some stuff that's not great. There's some stuff that are totally out of our control. But how do you operate in life in any event? You have to work with the circumstances that are there. Take lemons, make lemonade, sprinkle a little vodka in.
Oh, that's
make it a little Sunday treat for the afternoon, and keep rolling forward.